Market Blaster, where we blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets Editor John Dobis. The monthly report from the Bureau of Labor Statistics on non-farm payrolls was not good again. Help wanted, not enough signs out there, not enough jobs to be had. 80,000 new jobs created in the month of June. Economists were looking for about 95,000 to 100,000. You can see here the chart. This goes back to the recession. This is the beginning of 2009. These are monthly net job additions or losses. And we're losing about 800,000 a month here during the depths of the recession. We are, adding jobs, but we're not adding them as quickly as we need to get the unemployment rate down and get people back to work. The first quarter of 2012, we were adding 260,000 new jobs per month. Now, for the past 3 months, we're down to 75,000. Not good news for a guy who had the hope slogan, President Obama. He's in Ohio and Pennsylvania doing a little bus tour, chugging some beers with the girls, getting hot like the rest of us. But President Obama has a real problem on his hands because Mitt has a chance. An 8.2% unemployment rate for 41 months, the longest since World War II. Incumbents don't often get unelected or not get reelected, but President Obama has a big danger right here. Can he count on his good buddy Ben Bernanke from the Federal Reserve? Well, not really, not judging by what the market is saying today. Helicopter Ben in another round of quantitative easing might just have to wait a bit. The next Federal Reserve meeting isn't until the end of this month, July 31st and August 1. It'd be a two-day meeting, and then there's one in the middle of September. So, judging from the reaction of the market today, looks like no quantitative easing is on the horizon, but that could change quickly. Gold and the dollar are the two asset classes speaking to us most forcefully on this issue. The dollar, after the poor jobs report, was up about 2/3% against a basket of other currencies around the world. So a strong dollar generally means, higher interest rates, or at least not lower interest rates. The euro, relative to the dollar, it slid about 0.9%. Not a very good thing. If you look at the euro as a measure of risk-taking appetite in the market, it's plunged. Now, this is a 3-year chart. This is going back 2 years now. We're at a 2-year low, $1.22 for a euro. Gold also, gold went down 1.3%. If gold were going higher, you could say, well, QE's on the horizon, because when the Fed creates dollars out of nothing, it kind of debases the currency, and that's good for gold. But gold today was lower, so QE is not on the horizon. But you've got central banks all around the world. China, Great Britain, the Bank of England on Thursday, and in Brussels at the ECB, the European Central Bank. All three of these august central banks relaxed monetary policy in the past week, but it didn't impress markets. You can see what quantitative easing has done. It's inflated asset prices with each of its successive waves, but not so much. And after the quantitative easing programs have ended, the economy and stocks have gone back into the tank. Look at right here. This is when the Fed in January of 2009 began its first round of quantitative easing. It stopped here in May of 2010. The market tanked. Here's where Bernanke made his speech in Jackson Hole, Wyoming in 2010. Market rose on quantitative easing. After it ended last summer, the market tanked. The downgrade and all the debate about raising the debt ceiling and that kind of stuff. So quantitative easing is great. It inflates asset prices. If you're in the market anyway, it's great. It inflates asset prices and makes things look better. But after a while, it's kind of like a bad battery, Hey, get in there and try to turn it. Click, 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 click. Didn't hold the jump. Or it's like throwing gasoline on your grill. Sure, you get a nice little firebomb on your charcoals, but you won't stay lit. It's kind of like when Vinny in Pulp Fiction put the old, adrenaline shot right through Uma Thurman's heart. She got up, but she wasn't partying much more that night. So what do you do now? If you're an investor, if you're a trader, what do you do with your money? Because the market reacted unfavorably. The economy looks weaker than we even thought. Well, look for things that didn't go down as badly as the market did. One of those is Apple. Apple retook $600 this past week, and it hung on to it despite all the trouble with the jobs report. Actually rallied late in the day to be down less than 1/3 of 1%. Apple is looking pretty good. Apple does have some competition on the horizon for our boy here, Jeff Bezos, over at Amazon. Amazon is reportedly working on a mobile phone. They already have the Kindle Fire. They already have the Kindle. But Amazon could be calling your name. Down less than 1% on Friday. Stocks rallied decently from $210 to $230, backed off now to its 10-day average, $225 per share for Amazon. Hey, reach out and touch this. Remember that commercial? Maybe I'm too old, but reach out and touch someone. Touch AT&T for a yield of about 4.1%. Not a bad idea. It's just been going up as things have been going down. Intel, not a very creative idea, but Intel is everywhere. Get some inside your portfolio. You're yielding about 3.2% now on shares of Intel. Steel Dynamics. Stock was up on Friday. Steel, economically sensitive stock. But you can see the technical strength. The stock's recovered from 1050 to 1265, pushing up against its 200-day moving average. It gets above the 200-day, you could say this thing's in bull market territory. And home builders. Home builders are still rising, my man. Home builders hitting a new high, 2160, off a little bit on Friday. You got Toll Brothers, Meritage, KB Home, Lennar. They're all doing very well, tagging fresh 52-week highs. Yes, step up to where the flavor is. Marlboro Man. Marlboro, the maker of it, Altria, yields 4.7%. You can see that the stock has just continued to go up unabated as the market's had some rough patches, but $34.94 now for Altria. Not a bad deal there, getting your smoke stock. So the market now is begging Ben to come back in and do some QE3. If he does, you can expect a nice sharp jump for stocks. Whether it will last is another question.